Hi, this is Amy with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 11th of January. Starting off with the FTSE 100, which is still in this rather frustrating range, 76.40, 77.80 or so, and rising trend channel potentially there since the end of October. It doesn't look particularly inspiring, but at the top of that channel, 78.10. And if we break below 76.40, then perhaps we'll have a test of the floor of that channel, 75.50, worst case, otherwise 75.80 in the 200-day line. Beckon there. RSI still on the right side of neutral 50 at 53, which is a plus. Not quite sure whether there's an uptrend line there still in the RSI window, but at least we're on the right side of neutral 50, and that means that we're half full rather than half empty. If during the day or the next couple of days we break that line of resistance there around the 76.80 level, then we could be up to 7,800 plus, but rather dull compared to the other markets, for instance, like the DAX, which is next. Here, we've had, looks like we've had the consolidation, which was a test of old July resistance, 16,500 as new support, and we've bounced off that and heading towards our previous target there, just shy of 17,000. We can break that line there, the red line there from back in May, then the next level up by the end of next month could be up to 18,000, while we hold above 16,500. Below 16,500, the worst case is around 16,100 to 200, which is the area of the 50-day moving average and the old August-September resistance. Moving on to the Dow, which has been in a very steep rising trend channel since the end of October, and unbelievably still managing to remain within that. Normally you'd expect that to be wider and to take longer, but recent support is 37,000. Above that, looking to break that resistance line there from March at 38,000, and then head up to as high as 39,300 by the end of next month, which would be an amazing coup if that happened. Obviously one has one's views on the fundamentals behind such a rally. Moving on to Bitcoin, where I think we're still waiting for ETF news. We had a full storm or two in the meantime, but basically we've broken the old December, or the initial December resistance around 45,000. Above that, we're looking for a done deal move to the top of that rising October trend channel, 52,200, even with or without that news. Obviously, some people are expecting a rug pull if it doesn't happen, and at the moment 40,000 and the 50-day moving average area, the worst we're expecting. It could go down to 38,000 if something really horrible happens, but at the moment expecting this market to be on the right side of 40,000 and even the right side of the 50-day line at 42,000. Going on to gold, and here struggling a bit at the 50-day line, but at least it is bouncing off a rising 50-day line. That is around the 2020 level, and above that looking really for 2060 by way, or 2100 by way of 2060, 2070 over the near term. 200-day line not rising as well. The negative at the moment, though, is the way that the RSI has fallen below neutral 50, which does hint that we might have to be prepared for yet another dive below $2,000 an ounce. Moving on to the stocks, and it's the return of this rather obscure one. Advanced is next, and here we had the spike yesterday as if something's happening there. The levels, and there's not much to go on here obviously, the levels are probably 90 pence as support on the mid-price basis, and then 105, and then up to 140 if something really wonderful happens. But the key here is staying above that old 2022 resistance around that 90 pence level. Moving on to African Pioneer, which is one of, or was one of the 24 for 2024. Here we've got a sideways shuffle above a rising 200-day line. We've already got the 50-day line rising, so that suggests that we're going to a golden cross and suggests that something positive is going to happen in terms of the share price, at least heading up to 3.4 pence by the end of next month, which is a one-year resistance line projection from this time last year. At this stage, while we're on the right side of 2 pence, we're pretty confident of 3 pence plus on African Pioneer. The bears obviously getting rather upset about the recent rally in cellular goods, but it's done the trick in terms of the charting. We had the break of the 50-day line. I think we were looking at this in on the break of the resistance line there around 0.36. Above the 50-day line we were looking, which is now 0.41, we're looking at 0.6 as a target, and above 0.6 we were looking for 0.75 as a best case scenario target, which we've hit on the nose today at the high. Current view is that above 0.6, still looking for 0.75. If you're a fan of the shares and you don't like people throwing stones at the company and expect it to go better, then with its rebrand, then the next target up above 0.75 on an end of day close basis would be 1.05 pence, and that's the best case scenario there would be by the end of next month. Ideally we stay on the right side of that 200-day line at 0.63 on an end of day close basis, but that might be a little bit too much chance to ask for, even though the rally here started with a bear trap gap reversal, one of our best charting signals. Moving on to Carmell, which had an update today, and here we've had a bear trap from below the October support there at 8.8 pence, and now we've had a gap higher above a rising 50-day moving average at around the 9.9 pence level. Above that, looking for up to 16 pence by the end of next month, and maybe if we're lucky by the end of this month, given that it's now a bear trap gap reversal for Carmell. EKF is next, and covering the stock largely because not many people do look at this stock. Here you can see we've got a wide rising trend channel from June, top of the channel there at 42 pence. And we've got a rising 50 and 200-day line there, so this is a V-shaped bull flag, looking for that breakout through 33 to take us up to 43 pence by the end of next month, or even sooner. RSI has also bounced off the neutral 50 level, which is another leading indicator signal. Another stock which is relatively obscure but gets coverage here is Energy Group, and here we had the bear trap gap reversal, in this case from below July support there at 3.9 pence, massive unfilled gap to the upside. V-shaped bull flag breakout now, and looking for a target, initial target here up to 9 pence. Above that, looking for the next level up, which would be up to 12 pence by the end of next month, which is a line from way back in well, I suppose the summer of 2022 or the autumn of 2022. So the levels there basically we want the 6.7 pence level to hold, above that 9, and then 12 on E-Energy. Looks like something's going on at Emerson, well, at least the share price is going up. Here a V-shaped bull flag rebound. We've got a rising 50-day line now, just breaking December resistance around the just below 2 pence, above 2 pence. Looking for up to 2.6 pence by the end of this month, and that's backed by the way that we look at those candles as well. Hammer candle, and then 4 days where the shares opened at the low and closed at the high. So as I said, it looks like there's something going on there, although that is guesswork, not something which is in the mix at the moment officially. Moving on to Haydale, and here you can see that we've got a rising trend channel base, trend channel there from the end of September, top of that channel at 0.6 pence, which is where we're hoping for the shares to head by the end of next month or even sooner. We've got that sideways shuffle above a rising 50-day line, so expecting a break higher through 0.51 relatively imminently, hopefully over the next few sessions. Oxford Biodynamics was one of the big best performers, well, especially in September last year. I tweeted out that yesterday the shares have broken that line of resistance from October and the 50-day moving average at 30 pence. Above that, I am looking perhaps rather optimistically for 55 pence, maybe by the end of March. I think maybe at the end of February might be a bit optimistic, but the shares move now as they did back in September, and these things do happen, then it could be by the end of next month that we're up into the mid-50s. Really want to see the shares on the right side of 30 pence, though, obviously. Orosur has been a stock which has come up with the goods very nicely here. Here we had a very extended sideways shuffle above a rising 50-day line. It was a nearly 2-month affair. And then finally the breakout with the V-shaped bull flag or a handle at the end of it. Initial target here was 5 pence. Above 5, we've been looking for 8 pence by the end of next month, and that would also fill that gap down that we had back in May. On to Panther, where the company's delivered decent news again today. We've retested that previous target, 4.3 pence, which was after that bear trap gap reversal that we had at the beginning of last month. So that worked. It worked twice in a way. The other point to note is that we've got the shares a day or two away from a golden cross buy signal, and that tends to be the strongest part of the cycle, which means that above 4.3 pence we are looking quite confidently to 5.3 pence, and that could happen as soon as the end of this month. But a good recovery there for Panther after quite some time. CIMEC had an update today as well, and the shares have gapped up. We've had our old target there, which was hit last month at 1.7 pence, above 1.7. Looking for up to 2.1 pence by the end of next month, while we remain above the 50-day line at 1.2 pence. Just a couple of stocks to go now. First one is URA, and here shares are breaking the 50-day line now for the first time since September, which is significant. We're also above the floor of that gap there, 1.45. Above the gap there, looking for 1.8 pence as soon as the end of this month. Big picture target would be up to November's peak at 2.3 pence by the end of next month, and I think that may coincide with something exciting from the company operationally. Finishing off with Extract, which has had a bear trap rebound from below October support, and also the 50-day line at 105. Above 105, we're looking for up to 1.5 pence by the end of this month, on the basis that the latest price action this week is a mid-move consolidation, and we are ready to push up towards that 1.5p zone, backed by bullish divergence in the RSI window. That's it from me today. More updates tomorrow.